Hello everyone, Mike Starks with Remax Town and Country here with the first quarter real estate market report for Fredericksburg and Gillespie County. Unless you've been living under a rock, I'm sure you already know that the real estate market certainly has cooled off after the last 2 years of just, unprecedented record sales. And of course, we don't have to look any farther than all the economic uncertainty and, the rapid increase in interest rates by the Fed to know why. The increased rates are just really killing the folks who aren't loaded with cash. Let's say a guy wants to buy a house in Stone Ridge and he needs to borrow like $500,000. This time last year he could have gotten a 30-year mortgage with payments of about $1,975. But today's interest rates, that payment would end up being like $3,668. That means their payment like almost doubled. And subsequently, that means that guy can only afford half as much house as he could have last year. And these rate hikes just really stink for the average working person. And of course, this rapid rise in interest rates by the Fed has also caused a lot of this banking uncertainty and instability that we're seeing. You look at Silicon Valley Bank, sure, there may have been a whole lot of woke idiots over there, but if you really look at their assets, they were buying some of the safest things out there, like Treasury bills. The problem is they ended up buying long-term T-bills, at 1-2% interest, and then suddenly we got 7-8% interest by the Fed, and all these banks have tons of losses, unrealized losses, I should say. And it's not just California. A lot of Texas banks are in the same boat. Because the Federal Reserve causing inflation by printing too much money, then causing a banking crisis by shrinking that money supply and raising interest rates at the same time. You can Google the Federal Financial Institution Examination Council, go to their webpage, and you can find the public records search, and you can pull up the call reports for any financial institution in the country, and you can see just how damaging those rate increases have been to a lot of financial institutions. So yes, I guess I'm bad-mouthing the Federal Reserve again, but that's because they really are the root of so many of our problems. I'm still with good old Ron Paul. Let's audit the Fed. But I'm sure if you're watching this, you're probably more interested in what's happening with local real estate than about me rambling. So let's move on to the numbers. As usual, I'll just start with the total sales for Gillespie County. In the first quarter of 2022, we'd sold $121 million. You compare that to only $65 million in the first quarter of this year, that's down like 46%. And the number of properties that actually traded hands is down an even 50%, going from 180 units in 2022 to 90 individual properties being sold in the first quarter of this year. Then to look at in-town home sales, so far this year we've had 42 individual property sales in the city limits, equaling about $25 million. That's down 36.7% from the first quarter of 2022, where we'd sold $41 million, spread out over 70 individual property sales. Now, as I mentioned in my year-end report for 2022, I'm expecting 2023 to be a lot like 2008, 2009, where we see the total number of properties trading hands and the total volume of dollars being sold being down quite a bit, but I really don't think it's going to have much impact on pricing, and that seems to be holding true. For the first quarter of this year, the average home price in Fredericksburg in the city limits is at $638,695. We look at the end of last year, the home price ended at $659,689. So, that's down like 20% or 1.7% for the average home price. But keep in mind, this is data from only 42 sales. I'm really guessing the average home price won't really go up much, but it's really not going to go down much either. And we'll know more probably by the mid-year report when we have a little more data to examine. But one of the big surprises, the average days on market this year actually went down. The first quarter of 2022, the average days on market was 132 days, and the first quarter of this year is 117. Not a drastic change. I was just surprised to see that. Then let's move on to land sales. Pretty much the same thing. A lot less volume, but prices holding steady. For the first quarter of this year, we'd sold $10 million versus 2022, where we'd sold $47 million. So that's really a big drop of like 77.1%. And that also shows up in the total number of land tracts that we'd sold, with 20 sales this year versus 72 individual properties trading hands back in 2022. But like I said, prices are remaining kind of steady. Actually, the average sales price per acre for the first quarter of this year across the county is $35,186 per acre, and that's really quite a bit up from where we ended last year at $22,906 an acre. But again, this is really kind of a small sampling of data, and most of the land sales in the first quarter of this year were smaller tracts, which tend to be higher price per acre. So this number will likely kind of level off as well. And with all the banking uncertainty I was mentioning, I'm actually thinking land sales are probably going to do pretty well towards the end of this year. The last couple months I've just had a ton of raw land buyers just looking for a safe spot to park money. And all these contracts, of course, haven't shown up in the last quarter. And land may not be the most liquid asset, but it's one of the surest assets to have regardless of what happens to the dollar. And traditionally, it's always kept up with inflation. So I think I'll just cut the first quarter market report off there until we get a little farther into the year and have some more data to look at. A lot of my usual reports kind of get skewed looking just because we don't have enough data. But like I said last time, if you're thinking of selling, this is still a good time. Prices really here haven't gone down. And the money you get here, you're likely able to buy something wherever you're going a little bit cheaper than you could have last year. So not a bad time to sell if you're moving off. And if you're thinking of buying, it's still a great time to invest in Fredericksburg. We're not going to see that double-digit appreciation this year, but again, in 5 years, you'll look back and you'll feel like a genius for buying now. So that's it for the report. If you want to dig into those call reports in the banking industry a little bit but have a hard time finding it on the site, just shoot me an email and I'll send you the direct link where you can search that stuff. And if you do get in there, it's the R1A report that's really what you want to look at regarding, how the interest rate increase I mentioned has had the negative impact on the financial institutions. So, as always, you can find all these stats and more on my site at mikestarks.com. And as always, thanks for watching.